Hello, chart watchers, and welcome to Market Watchers Live with Erin Swinlin and Tom Bowley. I'm your host, Tom Bowley. Today's show is being recorded, so you should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived until the next show begins, so you'll generally have a couple of days to go back and review it. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Erin will provide me stock symbols from your questions, and I'll use those requests in the 10 in 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. It's at MKT Watchers Live. We do now have an area in the lower right-hand part of your screen. It'll say, "How'd we do?" Where you can fill out a survey after the show or as you leave. And we'd love to get feedback from you and find out what you like or dislike about the show. For those of you joining us for the first time today, welcome to the show. We're certainly happy to have you. And for our regulars, welcome back. Well, it is Monday. We're starting a new week and just about ready to start a new month. It's kind of hard to believe October's almost gone. But I do want to mention that on Wednesday, we'll be having Bruce Frazier join us. Bruce actually teaches at Golden Gate University, does graduate courses in technical analysis. He studies the Wyckoff method. So you certainly, if you've used Wyckoff or you want to learn more about it, I think Wednesday would be a great time to tune into the show, as Bruce, I'm sure, will have plenty to talk about there. And then on Friday, I'll be doing a reversing candlesticks segment. So if you're prone to trade in the short term and you're looking for possible advantages in doing so, I think you'll find the reversing candlesticks on Friday to be of utmost benefit for you. And with that, I'm going to bring in my partner, Erin. How are you doing today, Erin?
I'm doing very well, thank you. We actually are getting a reprieve from the hot weather. I'm so excited. Our high today is only 73.
Wow.
That's a big deal if everybody's been paying attention. I don't know, but Southern Cal, we've been in the hundreds, 90s, and now it's 73, cloudy, praying for rain. Our mountains that are charred are really looking for some rain, so hopefully we'll get that. But I don't know, because the World Series, they're going to be coming back here to LA, so I don't know if they want to have rain.
Yeah, and speaking of that World Series, I mean, it has been crazy. If you've been watching the World Series, I think this, if it goes into a Game 7 and comes down to the wire on Game 7, I think it would have to go down as the best World Series ever. Maybe some would probably already think it's been the best World Series ever. I mean, some of these games have been absolutely crazy, including last night's thriller. But it's a pretty crazy series. Looks like it's going to go. I think it'll probably go 7 games and heading back out to LA. So I'm sure everyone in Southern California will be excited for that.
Pretty much.
Yeah,
there are Angel fans out here, but
so. Yeah, they're golfing.
Yeah.
Here on the East Coast, I tell you what, things really cooled off. I went out this morning. It was 31 degrees. Had ice on my windshield. I'm like, okay, well, I need to move a little further south. I've gone from Maryland to Virginia to North Carolina, now into South Carolina. And so I just keep moving one state further south until I stop hitting ice.
Right.
That's my strategy. I'm sticking with it. So anyway, I know we got a lot going on today. We got our Monday setups coming up in a bit. And I tell you what, the setup you gave last week was crazy. I thought mine was good, but yours was awesome. We'll go over those and the setups for this week here in just a couple minutes. But why don't you go ahead and let everybody know what we're going to go over and then get that first market update out of the way.
There we go. Market updates on the half hour. I'll be getting to our first one very shortly. Talking technically, if there's anything of interest, Tom always talks about it. So we'll be looking to see what's going on in the market from your point of view. Monday setups, as you were saying, and breakouts alert. We're going to look at some breakouts and how you can find important breakouts So that'll be a good segment. And then 10 and 10 to 1. And the teaser today is WDC. WDC will be our first one for the 10 and 10 to 1. So you can go take a peek at it and take your own notes and see if you agree with what Tom's looking at. And then I will be giving you a nice lengthy decision point report, lots to talk about. And as Tom was saying, we're getting close to the end of the month. So we'll have to take a peek at just a few of those monthly charts to get an idea of what we're looking for going forward. But with that, I'm going to move right into our first market update. And here we are. First, we're just going to go take a quick look at the candle glance. This is where you can get the 12 mini charts all on one page and see what the heck is going on. And as you can see, we're down today. It was interesting because we headed very low in the morning trading, but managed to get right back up very close to Friday's close. Yeah.
I'm still seeing your agenda, so I don't think your screen switched.
Yeah. You know, it's Monday when you forget to share your screen. Okay, here we go. Yes. So as I said, morning open with the markets moving way down. You can see the Dow and the S&P, not as far as the Dow. And then we made gains right back up, and it looked like we might get back to the positive, but we're seeing a huge drop again right now going into the lunch hour. So with the NASDAQ, though, it seems a bit stronger. It is in the negative, but it's spent most of the day above the close from last Friday. Wow, small caps getting hit pretty hard. You can see Russell 2000, although it did make an attempt to move back up, it's just headed straight down. So small caps not looking very good. You can see treasury yields are down somewhat, and we've got UUP is also down. It's kind of a continuing a declining trend that we saw on Friday's start. Commodities are about pretty much unchanged as with USO. Gold has been mostly unchanged this morning, but is starting to rally and move a bit higher at 121.11 for GLD. VIX starting to rise again. Might be a little bit of worry out there when you see these declines, and declines are leading advances. I'm going to take us very quickly over to our member page, and I want to show you our predefined alerts right now. And we can see Russell 2000 did cross below 1500 this morning, and you know that shows you the difficulty that the small caps are currently having. And I will be going over a few of those charts later in the decision point report. But for now, that is all I have for the first market update.
All right, sounds good. I know, I was looking at, I think it was, I'm trying to pull up my schedule here. I know when I looked at the 10-year Treasury yield this morning, we had seen that breakout last week. It was up to, I think, 2.45 or 2.46, and it's pulled all the way back down and actually has left an island cluster reversal. So I thought what I would do first is start by showing that. So hold on one second. I'll get that up for everybody.
I always like those islands.
Yeah, it's usually a pretty good indication of at least a short-term reversal. So here you kind of see this move up on the TNX. We had been going almost straight up for the past, well, maybe for about 6, 7, 8 days. And then you can see that final gap up. And this is what Erin and I talk about quite often, where you get a gap up. And if you get a gap down, right back down the next day, then you kind of leave that one candlestick up there on an island. But in this case, after gapping up, we went sideways for 2 days in the yield. And then today we gapped back down, and so basically this is an island cluster because you have more than one candlestick up there, but you're leaving all these candlesticks on an island and now coming back down. Now, this does not necessarily indicate that we're going to be in for a long push to the downside in the yields. In fact, I'd be pretty surprised if that's the case. We do have a Fed meeting coming up, and so I would suspect that we're probably just coming down short term. The last high that we saw, we struggled to get through about 236 or so. And so today we're down to 237 and change on the yield. I wouldn't be surprised maybe to see this rising 20-day moving average, which is at 235, actually 2.358. That's where I would be looking for some support. I think you have some gap support that also comes in at that area as well. So that's what I'd be looking for. But that is an island cluster reversal. And so when you're looking at individual stock charts, and looking for possible reversing candles or patterns. This is one of the things that you could be looking for when you do see this. And you can actually see it back here in July where we made the move up, gapped up here, the last two candles moving higher, went sideways for a couple of days, then we gapped back down. So left these four candles in an island cluster at the top, and basically did the same thing up here in May where we moved up and left three candles in a cluster. So it's not unusual to see this kind of a pattern develop. The last time when we got the high in early October, you can see that that was actually a shooting star candle and kind of left that one on an island by itself before we pulled back temporarily. So just kind of train yourself to look for those kinds of those types of reversals. As far as economic news out today, we did have September personal income, which came in at plus 0.4%. That matched expectations. Personal spending was at 1%, which was slightly above the 0.9% that was expected. And then a little past 10, I think it was at 10:30 this morning, Eastern Standard Time, the October Dallas Fed Manufacturing Survey came out at 27.6. Market was expecting 21.3. And that followed suit with the Empire State Manufacturing Survey that we saw a few weeks back, along with Philadelphia Fed survey as well. So all of these different districts are showing pretty strong economic activity, and it's going to be really interesting to see what the Fed does based on this information. I'm a little surprised that we did gap down on the yield, and money is rotating into treasuries ahead of this meeting. But maybe traders are thinking that the Fed's going to hold off until December to take any action. I think that's probably what the majority are feeling at this point. And so we'll just kind of wait and see, kind of sit back. A couple of stocks, and I know I think Erin may be talking about one of these or a couple of these when we get into the breakout session. But Facebook and Apple both were having pretty strong days. You can see that we actually broke out on Facebook on Friday. We're continuing to push higher, a little bit higher today on Facebook, and Apple is basically doing the same thing. I think we're seeing a breakout on Apple here above this 165 level. So we're getting some additional money rotating into these tech giants. And on the heels of what we saw last Thursday evening, when we had Microsoft and Amazon, Google, and Intel all come out with blowout earnings, the NASDAQ actually moved up more than 2% on Friday in reaction. You can see that we saw really good action here in Apple and in Facebook as well, and they're continuing that move. I think Facebook reports earnings on Wednesday after the close, and Apple reports Thursday after the close. So more strength, seeing how all these other tech companies have reported. I think now traders are starting to grow more and more optimistic about Facebook and Apple as we head into their earnings this week. A couple of other interesting areas of the market to keep in mind. The XLY, which is the ETF that tracks consumer discretionary. Check out the breakout from Friday. We had a triple top coming up here to around 92. We made that breakout on Friday, closing well above the 92 area, but we have come back down a little bit today. I would be looking for this rising 20-day moving average and maybe gap support just below 91 as a couple of key support levels in the near term for the XLY. But I look at this chart very bullishly at this point. And what's really interesting is that the XLP, you would think that if consumer stocks are doing well, they'd all be doing well. But here's your consumer staples ETF, which is going the exact opposite way. So we've got XLY breaking out, and you've got the XLP breaking down below about an 8-month low, or to an 8-month low. So we saw the breakdown on Friday, and we're continuing that move to the downside. I have mixed feelings about this because I like the fact that the XLY is outperforming the XLP, but I don't like any area sector to be breaking down in the market. I like wide participation and participation from all the sectors, and we're not getting that right now with the XLP. So I'd like to see a reversal here. But the good news is that within the consumer space, money is rotating toward the discretionary stocks, which is the aggressive area of consumer stocks, and that to me reflects a sustainable bull market. So that's something to keep in mind. I think is bullish. Looking at some of the other sectors, 3 sectors actually have negative divergences right now on their daily charts. Here are the industrials. You can see with the most recent move to the upside, clearly the MACD has rolled over here. So negative divergence, we're struggling right at the 20-day moving average. If we close beneath it, we could see some additional selling here in the near term. on the XLI. The XLF is another area where we're seeing a negative divergence. Clearly higher prices, and there's your lower MACD. And we had a bearish engulfing candle, which was last Wednesday in this group. Watch for the potential of an island cluster reversal if we get a gap down on the financials. And anytime you start talking about the Fed in a Fed meeting, you're really going to need to keep an eye on the financials, because if they disappoint, if the Fed sounds, maybe a little bit, like they may want to delay these rate hikes, that could be the catalyst for a gap down, leaving this island up here on the top. So XLF will be in focus over the next couple of days. And then finally, the XLB materials, basic materials, also showing a negative divergence as they've continued rising. You can see their MACD has rolled over as well. So they've got support. They've had support at that rising 20-day. But if that fails to hold with a negative divergence, then we're going to be looking for 50-day test and perhaps a MACD centerline test, depending on how long or how much consolidation we see in that space. The XLV, which is healthcare, this is going to be the final one that I talk about, and we're going to get into the setups. But you can see it breaking down below the 50-day moving average, and I think at first glance you would say, hey, this is a pretty bad-looking group. But the breakout right here came at 81, and we went back and tested 81, and now we're at 81.21. So I think we're at a pretty key support level. And when I look at all the groups within healthcare, I actually think that most of the groups still look pretty good technically. So we'll start off with the medical supplies, the Dow Jones U.S. Medical Supplies Index. You can see this consolidation for several months. We just recently broke out. So I think this is a group that looks pretty strong, and that rising 20-day moving average now should hold as support, with the MACD showing considerable strength. So I think this is the first area within healthcare that looks really good. I get a lot of questions about the biotechs because I talked about how bullish I was over the summer. And clearly they pulled back. Celgene has been horrible. I think Amgen, which put in a nice hollow candle last week, I think it may have been on Thursday or maybe Wednesday, but that one had broken down below some key support as well. So we're seeing on the daily chart a big breakdown, heavy volume, which doesn't look so good. But if you actually back up and look at the longer term chart, we're sitting almost on the 20-day moving average, probably about 0.5% below it right now at 1959. We're down 10 points today, so about 0.5%. And that 20-week moving average is at 1971. So this is an area, I know sometimes it feels bad. You want to buy when things are going up, and then you don't really want to buy when they're pulling back. But this actually is a pretty key area of support, in my view, on the biotech index. So this is an area, if I was looking for biotechs, where I would be at least nibbling on some of the stocks. And a couple of the other areas within healthcare, health providers. Remember United Healthcare, UNH, came out with a big report last week. We've seen a big move up in healthcare providers taking out the prior highs. But if we fail to hold that breakout level, I just wanted to point out there is a negative divergence on the weekly chart. Now, I still look at the volume that came in on this move to the upside. So I'm not really viewing this as negative momentum or slowing momentum, but just keep in mind that that is there in the event that we reverse and fail to hold that breakout level. And then let's take a look at the medical equipment, which is DJUSAM. And you can see this one is another one where the MACD is continue to accelerate. I think there's strong momentum here. We're having a rough day today, down over 1%. But notice we're just coming back to the area where we broke out from, about 1325, and the rising 20 days at 1329. So you look on the surface and the XLV doesn't look that great, but then you start breaking it down and realize that 81 level on the XLV is pretty strong. It should be strong. And then you've got most areas within healthcare doing very well. If there was one disappointing area, it would be the pharmaceuticals. The DJUSPR, we had a breakout here above the 535, 540 area. Went in, put that long tail to the top, kind of signaled a top, and the selling has been pretty intense and continues to be down almost 1.5% today. So the last week in the pharmas has not been very good. And if we stretch it out to a weekly chart, you can see that we've lost that rising 20-week moving average. And the thing that's really disappointing to me about this is that we had consolidated for over 2 years trying to get above 540, and we finally did it. You'd think that there'd be all kinds of buyers jumping in. Instead, we've seen selling ever since. So this is the one area in the healthcare space that I would, find somewhat disappointing. So I tell you what, Erin, since I've kind of gone through a number of stocks, I'm going to let you start with the setups for this week. I will say, though, that your pick last week was AET, Aetna.
Yes, it was.
I am going to pull up an intraday chart here. That is a big candlestick. That's a huge move that came through at the end of Wednesday or Thursday of last week. Yes. Let me get, we'll go back and just show everybody where it was at the start of our little contest. It would have been right in here, and I think I have it written down here somewhere. Or maybe you
had it written down somewhere. It's in the Market Watchers recap. So
actually, I got it right here. 162.28 is where it was, and it got as high as 184. So it was like a 13% move 3 days later. That was a pretty strong move. So I got to give you your props on that one.
Yes.
So that was a great call. And they did have rumors. The Wall Street Journal was the rumor. That's that big spike that you see here on the chart. There were some rumors that the Aetna was going to be bought out. And as a result, we had that huge spike. But, that's sometimes what technical analysis tells you, that there's accumulation taking place. And no matter how you slice it, that was a great call.
Oh, thank you very much, Tom.
Yep. And I had a good one too, but it paled in comparison to that one.
Well, I mean, what are you going to do?
Yep. Extreme Networks 1059 was where it was back last Monday. And you can see it also had a very nice day. Got up as high as 1220 or 11. I don't know if I said 1059, but 1159. But it got as high as 1220. So at the high, that one was up maybe, 61 cents. So that's like 5% at the high. Not the 13% that you saw, but 5% is nothing to sneeze at.
I think everybody would have been just fine with that.
Yeah, actually, both of them. I mean, they were pretty amazing. So we got our work cut out for us after trying to follow up those two.
I know. I did have some choices when I did do my scans. But first, I do want to show you really quickly. We've had some people asking about the Facebook archive, so I just wanted to show you really quickly how to find it. And wow, isn't that funny? That's the picture that came up as, do you remember placing this post? Anyway, once you're on your Facebook page, you just go up here to the search box and you will type in Market Watchers Live, and there we are. This is going to bring you to where you can get to our page, and of course you want to like it. And once you're on our page, you can just go over here to videos and see you've got that live button right there that says live. That means, well, we're live here. And there you go. So here's what we're doing now. And of course, we'll get the infinite loop, right? And then here are the other videos. So you can see we have them archived back pretty far. So there's the workshop I did on the PMO, Martin Pring, etc. So I thought I would just give everybody a quick look at how to get to there. So, So these are actually the Monday setups that I came up with. And, everybody asks about my scans. I will put the link in there in the Market Watchers recap. So you'll want to go there to get the copy of my scans. But when I actually ran two scans. One gave me 7, the other gave me 7 more. And so the question is, right, how do I narrow it down to just 3? I have it's hard to explain. I have a look at the chart. I know based on where the PMO is, what I want to see. I'm looking for certain chart patterns. So for example, Estee Lauder came up, and just even from this candle glance, I can see a double top. So I already know I don't want that one. And I basically go through, and similar situation here. We're getting a pullback, but it's past that 20-day EMA. You could see it just barely there. So I would dump that. But anyway, those are ways to get in there and, cross out what you get when you get a scan. So these were the 3 that I got, and I'm actually going to pick Etsy this week. So we'll be able to write down a close here in a moment. But these were the ones I didn't take, and why. So I thought Cogent looked pretty good. I've got this PMO. It's getting ready for that buy signal. You can see OBV volume is good. You want to see a top that's going to form above previous tops. So I already know that's good. We've got a really good looking scooter. But when I looked at it, it's like, okay, we got that breakout above overhead resistance and we're pulling back, but there's a really good chance we could pull back to that 20-day EMA. And that's like a 2.8% drop. So I didn't like that risk reward because I didn't really have an upside potential here. So that's why I didn't pick this one. Although going in with a 1.42% decline, I mean, I think that does give you a little bit of hope that you're going to recoup that. But I just didn't like the fact that I could end up with that loss. Invacare was the other one that I picked. It's on a nice rising trend. Look at, we've got the PMO on a buy signal now. But the problem I had with it was, the volume that is contracting on the way up on this rally. And that I'm with Tom. I like to see some high volume on breakouts, but I don't like to see a volume pattern that's starting to decline, especially if we're going on a rising trend. So I think this is still probably a decent one because we are above that 20-day EMA and we are still in a nice rising trend channel. And so, I liked the risk reward here, but I didn't like it as much as I liked Etsy this week. And here is why. So I'm going to just start at the bottom part here. So we've got that strong scooter. Yes, we're seeing an OBV line that's sort of trending lower, but look at just the volume pattern here. On that breakout, we got some really great volume, and it was a breakout above a declining tops trend line. And you can see right here, overhead resistance is up at 18. We just got above that 20, so I'm not really expecting much more of a pullback at this point. I think it's now formed some pretty good support here on that rising, on that declining tops trend line. So my choice, and I guess if we want to go at last right here at $16.58, will be Etsy.
All right, so we got that one down, $16.58. I got to make sure I keep that in my trusty dusty place here. All right, so it's Etsy 1658. All right, well, I'm going to go through my setups, and for those of you who are not familiar, I do multiple setups on Mondays. So when you're taking a look at there we go. So when you're taking a look at these charts, I mean, I think there were 7 setups that I did for this week. But I will show you first where you can go to find the setups. So let me do that first. So from the your member dashboard, if you go into blogs and under the menu, just drop down to trading places. Right here, there's a link that says click here to see my live chart list. And what I do is as I update these, I just take off. I think we can keep up to 30 in this particular chart list. So the older ones fall off and the newer ones continue. So if you click on this, what you're going to find are a bunch of setups, not just the ones for this week, which I use, you'll see is 1030. So that was as of this morning, 1030 setups. But then if you keep going back, you'll see here's the 1023 setups. And you just keep going back, 1016 setups and so forth. I think I've got like the last 4 weeks in here. Yeah, there's 10.9. So you can go back and take a look and see how some of them have fared. Some have done well, some not so well. But what I've done is just pointed out some of the things that I like. I'm going to come back to JD because that's going to be the pick that I take for this week. But I'm going to go with GWRE here, just showing you that this has got a really nice trend line. Also, the breakout that occurred back in late August and again into early September have left a couple support levels down around 73 to 75. And you've got this trend line. So stock broke out on really heavy volume, has been consolidating. You've seen that RSI drop all the way back down to under 50 now, into the mid 40s. That generally is a pretty good area when you look across during an uptrending stock. If you get the RSI in the 40s, you're probably getting pretty close to the bottom, assuming that that trend continues. And I would say that the trend continues unless we break down below that, say, 72.5, 73 area. Navistar made a nice breakout here. Made a breakout a while back, was continuing to go higher. You can see that the RSI was up in the 70s and 80s for quite some time. I don't like that. I need to see some consolidation at least. We got a pullback. We went back up, tested the high, and now we've come back down to a key support area where it's held. I would just have a tight stop in the event that it breaks down, but I would be looking for another move back up to 45 or so on Navistar. Copart, gap up. I think that was an earnings related gap up. We pulled back, finally broke out. And now as we pull back again with a really strong MACD, these pullbacks to the rising 20-day, for me, are usually pretty good entry points. So I was pointing that one out. CarMax, very similar. Big breakout on heavy volume. That was earnings related. Made a nice move up to about $77. Has since pulled back into the 74s, which I think is a much more palatable entry, especially again with the RSI dropping back closer to 50 as opposed to being up in the 70s and 80s. The next one, Micron Technology. Nice gap up here, or nice move up here, breaking out. Very strong volume off of the last bit of selling that we had, but it's been consolidating above 40. This one hasn't really given too many entry points, down below. It just keeps trending higher. So I was looking for a nice move to the upside, and we seem to be getting pretty decent move today in Micron. The last one that I'm not picking is Delta Airlines, but it is also hitting a trend line. Airlines have been really weak, but Delta has been one of the better performing airlines. So I would be willing to give it a shot here close to the trend line. You can see it gapped a little bit below it, but it is trying to print a hollow candle. So this one could be bottoming. My pick for this week is JD.com. JD, and it's at a pretty significant gap support area. You can see the first time we tested the top of gap support, we printed a hammer, and then we moved higher. This time, after a huge move up, this was pre-earnings, and then the earnings actually came out. The stock moved back down. I think we've been consolidating. It looks really good, I think, on a weekly chart, all of the consolidation that's been taking place. But I like that hammer that printed on Friday with the low going all the way down to fill this gap. So I'm going to go with JD, and let me pull up that chart right now, and it is at 37.12. So I'm going to go with JD at 37.12. I'm going to let you take over, Erin, for the next market update, but it's in the books now. We have our picks for this week.
27.12.
Well, that would work out really well for me. I'm going to go with 37.12.
All right. Thanks for that. I'm just making sure I write that down correctly. All right. Let's go ahead and I will do our next market update for everybody. And this time I'll share my screen. That'll make it a little easier. All right, here we go. So this is just your member dashboard. I wanted to show you one other very quick way to go find out what's happening in the market. And that's this under the market overview. If you just click market summary, that's going to bring you up the market summary. And you can click here to order it by percent change. So as you can see, S&P 500 of the major markets is moving down the most, right, followed right behind it with the New York Stock Exchange. NASDAQ 100 is actually in the positive right now. Technology seems to be hanging in there at this point. And then we can see, as I pointed out earlier, the small caps S&P 600, Russell 2000 are all having issues today, down well over 1% as far, well, 1.25% for the S&P 600. Energy and technology are leading as far as the sector spiders. Healthcare and consumer staples are the laggards. As far as industry groups go, oil services and oil near the top right now. I think that's interesting, as well as gold. And we can see transports and retailers are the ones getting hit the hardest right now, with transports down almost 1.75%. And let's go very quickly to the member homepage yet again. And I wanted to show you what's going on with our top 10 right now. Most active, S&P 500, AMD, GE, and Apple. And I know I'm going to look at a few of those coming up later. So I'm going to end our market update right here so we can get right into our chart breakouts.
All right, sounds good. A couple of things that looked a little interesting to me today. First, toys. The toys index is the leading group in the consumer discretionary space. And a couple of things pretty interesting about this chart. So I thought I would go ahead and let everyone take a look at this first. But you can see after topping in early September, kind of had a little double top there, went sideways, but we've been holding onto the support, and now we're starting to move again to the upside. We haven't made a breakout, and I would be a little careful with this group. I think I mentioned last week, or probably mentioned it in the past, that when you look at the seasonality, even though we're heading into the holiday season, and you would think maybe toys would be a great performing area, If you go back the last 18 years, you see actually that after you get past October, November's average return over the last 18 years in this group is 0.2%. December is minus 0.2%, and then January is minus 0.5%. So it's really not until you get past the holiday season and even beyond January before we really start hitting the months where toys tend to do pretty well. So I thought I would just bring up that chart. And then within the chart, part of the reason for the strength is after we saw huge gap downs with earnings last week, Mattel was one. Actually, I didn't want to do the seasonality. Let me just pull up that chart. But Mattel, after gapping down, now you got to wonder, we've talked about gaps. This is starting to look to me like an exhaustion gap. Just based on that, it closed at the high on Friday after a huge gap down off of a big downtrend. And you can see, look at the difference between this gap and what we've seen in the previous 3 or 4 with heavy volume. That's a filled candle, big volume, filled candle, big volume, filled candle, big volume, filled candle, big volume. Now, what a filled candle means is that you're closing below your open. So the movement to the downside is continuing even after the gap down. The difference with this one is we've got a huge hollow candle, and look at the volume. To me, it's like everyone, when the news came out on the earnings for Mattel, everyone just said, that's it. I'm not taking anymore. I can't take the pain. Everybody's selling. And so what happens after everybody sells? Well, stock starts to rebound. And so on this kind of volume with a hollow candle like that, Mattel looks like a really good, strong candidate for a possible exhaustion gap. Now, after moving up like this for 2 days, I would prefer, because it looks like it's filling the gap, I would actually prefer to see it on lighter volume move back down again and get somewhere close, anywhere in the 13s probably, I think would be really interesting. But one of the reasons why we're seeing the toys index move up is that a stock like Mattel may have bottomed. And then I was looking, I think, at Hasbro, which has done much better than Mattel, but still, hasn't been doing too good since mid-July, or too well since mid-July. But notice after the gap down in the filled candle here, instead of continuing to the downside, we actually have rallied back to fill this gap. So this is another one that I think has filled the gap. So I don't know that I'm really trusting the toys index at this point as it hits or approaches a major resistance line, and also at the same time moving into a period, November to January, where the group tends to not perform well. However, if we do see consolidation, especially in that Mattel chart that I was showing you, let's go back to that one. So if we see over the next month or two or couple months some additional weakness on Mattel, and we, on lighter volume, move back down closer to that 13 and a half area, Mattel could be really interesting from a longer term perspective with a fairly tight stop. So that's something to keep in mind. So with that, I know we're going to go into some of the breakouts. I do want to just let everybody know, if you're at your the member dashboard page and you've got these gears over here, if you've got the your scans and alerts set up, with the check mark, when you get down to the bottom in the scans area, you will see this predefined scans. If you click on that, it'll take you into all kinds of different indicators that these are already predefined scans. So for instance, if you want the new 52-week highs, here they are. These are the stocks today that are printing new 52-week highs. And this red bar here just means that the number of 52-week highs is down from what we saw on Friday, but there's still 407 of them. That's a lot. So you can literally just pull up, for instance, the NASDAQ, and this is what we're focusing on today. But if you pull up the NASDAQ and then sort it by volume, heaviest volume first, you'll see a number of the big names that are setting 52-week highs. And so with that, I'm going to pass it over to Erin and let her take a look at some of these for you.
Yes, I shall do that. So Tom was looking at these, and he had a few that he suggested I look at, and I agree they're very interesting. So I'm going to head over here.
And these are all stocks that people are really interested in, too. These are some of the big names in techs. And of course, we had a number of them reporting earnings last week. A couple like Apple and Facebook will be reporting this week. So,
yes.
Backdrop.
Yep. And so, as Tom was saying, you can use those scans, and they're going to bring you right to charts like this, where you can see a breakout going on, as we see this breakout going on in Apple. And you can see, I really like the way it's set up too, because we got that PMO kiss of the signal line, sort of that fake out. pull some people out, and now it's going straight up. We've got some great momentum on this breakout. Looks pretty good. Look at, we're bringing the scooter back to life here as well. And I'll just look really quickly at the weekly chart as well, because I'm going to go through these pretty quick. But there you go. You can see the importance of this breakout. It's looking really good. I don't like to see a trending lower or PMO on a weekly chart, but it has turned up and it's headed back toward that signal line. So I think this is looking pretty good with the breakout. Intel Corp. All right. And some of these I think we did actually get as requested for the 10 and 10. So this will kill a couple birds with one stone. All right, Intel. Look at this PMO again. Came down, looked like it was going to cross below, and then it took off. Look at that gap up, really pretty. We're now sitting in the hot zone for the scooter. And you can see that really nice move of the OBV following along with this breakout, which it definitely looks very interesting. And again, I'm going to take us over to the weekly chart because that's where you can see a lot of times the significance of these kinds of breakouts. And as you can see, we've got a really great breakout going on here. The PMO is on a buy signal and heading straight up. I think the one thing I would caution on Intel right now is that really is parabolic. That's just a huge, very quick move. And typically when these parabolics break down, they break down to the last area of consolidation. So where would that be? All the way down here. So I would beware a little bit. And if you got in on this one, enjoy that ride. But I don't know if I would be getting in just yet. I'm going to look here at NVIDIA. We've talked about NVIDIA a lot on the program. Again, lots of interest. Look at that pretty bull kiss. Came down, looked like we were going to get the sell signal, and now we've turned right back up. So we got that again, the breakout, since we're looking at breakouts. Look at this scooter. I mean, NVIDIA is one of those, it's internally strong, but it's also relatively strong compared to its peers. And you can see that with this scooter that pretty much has been near the top and leading at 99 point whatever. It has kept it right up there onto the top. So the only bad thing I guess you could point out would be this declining tops on the OBV, but not their rising up here. And so that could be considered a negative divergence, but I don't think it looks that bad. I mean, it's a great breakout on good volume. So see this move at this point, I don't see it as much of a parabolic because you really could draw in a rising trend channel here, but you could also draw it in as a rising wedge, which of course you're supposed to expect a breakdown from that. And notice on the PMO on the weekly chart, it is starting to top below the signal line. And so that could be letting us know that we're getting this great breakout, but it might require a bit of a pullback. Let's see, we want to make sure that we catch most of these. I know you had some too, Tom, so I want to get through pretty quickly. Again, those bull kisses came down, got the whipsaw. It's nice not to actually get the signal because that can certainly scare you out. But we got the buy signal on the whipsaw back out, and now we've gotten back above some overhead resistance there. Looking pretty good for Amazon. And I would say when I look at that weekly chart, again, really nice breakout above these highs for the week, intra-week highs on Amazon, but really nice rising trend. I'm not looking at this and seeing the problems with a parabolic like we were looking at with Intel. And we now just got a PMO buy signal on the weekly chart. So this looks like a really good breakout. And I think we're getting some good confirmation from those signals. CY, there we go. Cypress Semiconductor, there's your breakout. Nice double bottom. So I say that executed. And the length of the pattern is roughly, well, let's see, 15 and a quarter to 16, a 75-cent differential. So add 75, you'd be looking for a $16.75 upper target, minimum upside target. And finally, FSLR for solar. Again, these really beautiful breakouts, and you can see how Tom found them. He showed you earlier. I'm sure he'll show you a little bit more later, but nice breakout, the gap up, brought us to that overhead resistance level, and then it started straight back up. Nice. Came again. Got a little bit of a fake out, got the buy, and it whipsawed, but came back up on this really nice breakout. And I will show you the weekly chart just very quickly. And you can see upside potential here at about 75. So looks pretty good. And look at that bull kiss on the weekly chart. So looking pretty good. And we're not all the way to that overbought reading that we got back here in 2013. And those were the breakout leaders. And I know you have about 5 minutes, so I'm going to hand it back to you, and we'll get ready for that 10 and 10.
Yeah, we've got. I got a few more. Erin went through a lot of the big names. I know a lot of you are interested in those companies, so appreciate getting that update on those breakout stocks. And literally, I mean, if you're new to technical analysis, when we start talking about breakouts, we're talking about stocks that are trading at new highs. So it could be a 52-week high, but it doesn't have to be a 52-week high. You could have a stock that earlier this year was trading at $20 and it went down to 12 and it bounced to 15 a few times. So it got into a range between 12 or 15. And then all of a sudden you get a breakout above 15. And that's considered a breakout. So you don't always have to associate breakouts with 52-week highs. It can just simply be clearing prior resistance. So again, just wanted to clarify that. As far as many of the stocks that Erin was looking at, a lot of them gapped up because with earnings. I know First Solar was one in particular that had gapped up with earnings last week. So it's not one that I like to chase. Those types of stocks. I like to see if I can get a pullback, maybe closer to the top of gap support. But I do think that the moves to 52-week highs is underscoring the strength that we're seeing in the stocks that Erin just went through. So these are very similar stocks, except some of them you probably haven't heard of. So I'm just taking a little bit different approach into some of the breakouts. Now here you can see SPCB, Supercom, making a huge breakout. It's only a $4 stock. Look at that volume. One of the big concerns for me on a stock like this is that prior to today, when you're looking at the volume, for instance, the volume on Friday was 84,000 shares. 15,000 the day before that, then 80,000, 11,000. It's just not enough volume. So when all the hype, comes down on a stock like this, you could really be left holding the bag. So this isn't a stock that I would trade, but I just wanted to point out the breakout because it is a huge move up, very heavy volume, and it is clearing prior highs. So it is in breakout mode. The next stock is XNET. This is a different kind of a breakout in that this one has broken out and it just continues to move higher. So let me get rid of the inspector button there. But after moving up, you can see the volume started coming in August relative to what we had seen previously. And then when it went up and put in the second high, notice there's no volume to speak of. So that to me is a little bit of slowing momentum, no volume on a breakout. And also look at the MACD, which had not gone to a new high. So we had a negative divergence. XNET then pulled sideways for about a month, went all the way down to the 50-day. MACD went all the way back down to that centerline reset that I like to talk about. And then the volume push came in on the stock to the upside. Look at the volume coming in. This is somewhat parabolic, as Erin referred to. And the stock has moved from, $4.30 up above $9 in about 10 trading days. This is probably not the kind of move that's going to last. So you want to be really careful. But the volume, look at the volume today, already 6.5 million shares, and we're just at the halfway point of the day. So anyhow, this is one that I would have to wait on for a pullback. There is one other stock that I want to show you in particular that possibly is breaking out, because the difference between a breakout and a false breakout is what happens into the close. So take a look, for instance, at BUFF. I want you to look at this breakout. See how intraday we got up as high as 29.84, easily clearing these prior highs. But notice it's reversed. And if it finishes like this today and closes like this, you will have a false breakout with a much lower MACD. I think that's probably signaling a top. And we get questions, what do you do? How do you determine when to sell? Well, if I see a candle like that, a false breakout with a negative divergence, that would be a signal to me to get the heck out. So with that, we'll conclude the breakouts, and we're going to move right into the 10 and 10.
Yes, and we're going to start them right on time. And as I teased everybody, the very first one will be WDC. C, Western Digital.
All right. I think we may have looked at this one last week. I know I wrote about it recently. Let me just show you the trend lines, the triangle that I'm watching very closely here. So I think if you look at that, and then you look at this, I think that it has been squeezing. And if you go back further in the chart prior to 2017, you'll see that we had a really nice uptrend in play, and we've been consolidating in a symmetrical triangle. We got the breakout on increasing volume about a week ago. I think the fact that it's pulling back down to test this area is a good entry point. I like WDC.
All right. The next one would be FCX.
All right, FCX, which is Freeport. I know it's been struggling. I think it's kind of in a bull flag. We did have a negative divergence recently. Let's pull this up and annotate this. The two key areas, there was the top, and notice right on the top, bearish engulfing candle. So when I get a reversing candlestick on the top, along with a negative divergence, here's your higher prices, here's your lower MACD, negative divergence, reversing candle, and this thing went almost straight down to test its 50-day moving average. And look at the MACD back to the center line. We simply have been consolidating. I think from a reward to risk standpoint, I think FCX looks pretty good down here. The closer it gets to about 1375, keep a tight stop. I'd be looking for a target of 1575.
Okay. The next one I have for you is CNQ.
CNQ. I think I saw someone in the chat room mention that, and it was a fan or a favorite of Mr. Schnell's.
Mm-hmm.
Mr. Schnell will be coming back soon. I'm sure we'll have him on the show soon, and he can give us his update. Yeah, I like the action here. I think this pullback came right back to price support. So we were talking about breakouts earlier, and the thing you need to know about breakouts is that when you get a breakout, the prior resistance level, where you struggled to get through, actually becomes support on these pullbacks. And take a look at this, where we had a false breakdown with this tail coming below, and we come back up and we hold it. And then the next 3 days, we've been straight up. Now we're trying to make this breakout. I think today it just depends where we close, because the volume looks strong. We're trying to make the breakout. If we close above, say 34, 35, 34, 40, I would find this to be very bullish. If we fail and leave a tail up there, then I think we can look for more consolidation.
All right. The next one I have for you is LN, and that is Line Corp. Pretty interesting flag there.
All right, Line. Yeah, really nice breakout. Kind of fits right in. We could have used this in the last segment.
Right?
Yeah, really nice breakout just a couple of days ago toward the end of last week. But there was a prior high from back in early April. Also, we had a few tops, it looks like right around the 37.75 area. So I would say if we pull back into this zone, notice the rising 20-day moving average is also moving up into this price support zone. But great volume on this breakout, which is what you want to see. So it's just too overbought in the near term. I think the problem with getting in here, and I'm not saying it's going to pull all the way back to 39, but that's where the reward to risk really starts to turn in your favor, the closer it gets to 39. I just don't like getting in here, because if you get in, you've got resistance now established up near 43, so you only have a little bit more in the buck to the top side, but you've got $3 or $2.50 down to your initial support area. So that is where the reward to risk is skewed in the wrong direction. So I would wait on the stock. I think it looks great, but I would wait and see if I could get it. If I was looking for entry, I think the closer you get to 39, the better it looks.
All right. Next one is EXL.
EXL?
Mm-hmm.
All right. I wonder if it's XEL.
Oh, maybe so. That's probably it.
I'm going to do XEL, because when I heard it, I didn't know an EXL. But
no, it could have been me. It is Monday, remember?
Well, if it's XEL, I really like it. Looks like a cup, maybe a handle going in here. We did put in a little bit of a reversing bearish engulfing candle on Thursday of last week. But what I would be looking for here, oops, wrong one. Let's do the parabola. But what I'm seeing here is maybe right there, and then again down here, and then maybe at this high. See that cup off of an uptrend? So I always like to get that uptrend. Then you get the cup. I think we're consolidating here in a handle, and I would be looking for a breakout on a heavy volume move through 50 and that would measure up to about 53. This is not a fast moving stock. So a breakout, I'd be looking for a 53 target.
All right. Let's see. The next one I have for you will be ICHR.
ICHR.
Yes. And that is, iCore Holdings.
All right. I think this one's going to be pretty easy. I like it. I like the breakout. It's sitting right on the 20-day moving average right now, and it's not too far from testing this price support area. So it is a fast mover. Unlike the XEL I was just looking at, this one, we're talking about $24 to $36 in about a 1 month period. So this one is a very fast mover. I would say 28 to 30 is your area of support.
All right. Okay, and you're doing great. So our next one is weed.to. Quite the breakout right now. It's getting higher.
I caught that.
I am in California after all.
Yeah. Well, it's also smoking, so there you go. So I can match you pun for pun.
There you go. I like it.
Yeah, there's a pretty big support or resistance area. You can see actually the top that we had. Look at that bearish engulfing candle. Again, these candlesticks, and I'll be talking about this more on Friday, but they can give you really good signals. You can see that marked a pretty significant top for a while. Doesn't always give that kind of a signal. But and even over here looks like maybe a dark cloud cover at the top. But this 13 to 14 area was resistance for quite a while. We gapped above that, and look at the volume today. Now, I'm not exactly liking this candle. I'd like to see more strength later in the day. But as long as we hold above 14, I would be looking for more strength in the near term from weed.to.
All right. Number 8 will be Comcast CMCSA.
Yeah, I mean, if there's one thing I like here is that it does have a positive divergence. And notice that the last key low finished with a hammer. So what I would be looking at here is notice when I say a positive divergence, this is what I'm looking at. Lower lows, and there's your higher MACD. So we've been struggling at that falling 20-day moving average, but with this positive divergence, and there's your hammer right there. Notice that tail on the hammer has continued to hold so far. So I think that's the key support area. And I would actually be looking for maybe either a 50-day test or maybe this last high. I'm going to say between 38 and about 38.50 is where I would be looking for the stock to go.
All right. Number 9 is TSCO.
Yeah, Tractor Supply. This one's been kind of interesting and I have to say a little disappointing what happened last week. But I do like the hollow candle. And I think what this is beginning to show is that this stock is fully sold out. I think this one goes higher. I didn't like the fact it lost neckline support. And I'll show you what I'm talking about. Right here, this was a bottoming head and shoulder off of a downtrend. Left shoulder, neckline, head, neckline, right shoulder, breakout, increasing volume to support that breakout. Now, what I would have expected is for the stock to hold 57.50. It came out with earnings and noticed the gap down, so it looked like it was breaking down, but it was being bought from the moment it opened that day on very heavy volume. Nice hollow candle, and we're continuing to see this move to the upside. I think Tractor Supply is bottomed. I think it's going to go up and test the 63 area and eventually break out.
Okay, and now we're done almost. We have one more, and that is going to be FCG. First Trust Natural Gas. Kind of an interesting breakout, and I do see the PMO turning up.
Yeah, I would be looking at this as a bottoming reverse head and shoulders, and if you lose that recent low, then I would be out of the stock. And what I'm looking at here, I mean, I would definitely be playing this as a neckline. Here's your left shoulder over here, left side of the neckline. Here's your lower low for the head. Here is the right side of the neckline, which is upsloping, which I like. And then also you've got an upsloping left shoulder to right shoulder from here over to here. So I think this one looks pretty interesting to me, and it's moving back up. A breakout above 22.25 would confirm this bottoming pattern, and a move back down below 20, I'd be really careful because that would then look to me like it's continuing that prior trend to the downside. But this one looks pretty good.
All right. That is 10 in exactly 10 minutes. I mean,
Boom.
5 seconds after, but we started 5 seconds after at 9:50. So it can be done. Our director, producer,
it's going to be done. There we go. All right, so we got one final market update. So why don't you get into that? I might have one or two comments, and then you got your decision point after that.
Indeed, I do. All right. So here we go. I'm going to just look right now. I want to look at our predefined alerts. As we saw earlier, Russell 2000 has crossed below the 1500. I am going to look quickly at some small caps when I do my decision point report. I wanted to show you what the scooter movers were looking like right now. And remember when I looked at that NVIDIA chart, it is in the top 10. It pretty much sticks here most of the time. We don't see much of a change there. The top up, we want to find out who are the big movers today. And as you can see, as far as large caps go, these would be considered our top 10. And if we go and look at small caps, because I think that's going to be interesting. Honestly, if I look at top down, who's made the worst moves as far as small caps, since we know that they're already struggling right now. And let's see what we have here with CRCM. And you can see that we are hitting this area of support. So while it's not looking good as far as the scooter dropping pretty much out of the atmosphere, we are in a sell signal, but you can see we're really getting close to that $14 level, and that's held as pretty strong support. So something to keep an eye on. This is how you can find out which ones are the big movers and which ones could be potential. We also have my DP signals, which could be potential investments. So that's what I just wanted to show you very quickly for our second market update. Not particularly exciting, but did you see something you're interested in?
Yeah, I just wanted to point out one chart that I think looks pretty interesting. Made a pretty good breakout here of late, and that is, well, I'm going to show you. Waste and disposal services. You can see Thursday of last week, we had a really good day here, taking out the prior high. We've got a steady, this is kind of a steady as it goes kind of an industry group. It's not a flashy group. It's not the internet stocks. It's not going to be up 10% today, another 8% tomorrow, and then pull back. I mean, this is going to be much slower movement, but I do like the action here. You notice that the MACD was sitting at the center line, has started to accelerate to the upside. So I really like this breakout recently. And if you find an industry group, and I like to keep reinforcing this, go back to your member dashboard, and you can pull up the industry groups here, and then simply drop down. You will see that, where was it? Waste and disposal services is here. So today's not having a particularly good day, but once you find your industry group, all you have to do is click on that. If you know you've got a pretty good group, and then you could simply take a look. Maybe what I would do is maybe look at a 1 week and see what's been pulling back. And to me, a 15% move is not a pullback. That's a problem. But I might look at some of these that have gone down a few percent. I don't know, maybe CLH, and see if any of them look decent. This one would not be for me. Maybe Stericycle. I think that one had been doing better. No, that was not the one I was thinking of either. Waste Connections, I know, has been doing better. Yeah, this one had broken out. Now, there's a really nice volume move to the upside. The stock was as high as 74. So this is one of the stocks that's going along for the ride and helping to lead this group, and is pulled back about $3.50 or $3 from the recent high that we saw at the end of last week, back down close to the rising 20-day moving average and close to the top of gap support. So WCN, if I look at the industry group and I find something I like, I think you can then just kind of scroll through the group like I just did to find individual stocks within that industry group that meet your criteria. But I think WCN would be one. It consolidated for about 5 or 6 weeks between 68 and 71 before finally breaking out with increasing volume. Now it's back to test that level. So I would think this one looks pretty interesting. So I was going to let you go ahead and take over with your decision point, and we'll wrap up the show afterwards.
All right, let's get to it. Okay, I'm going to start over here. I wanted to look at the big 4 indexes that we follow on the decision point scoreboards. And I'm going to show you very quickly where you can find the decision point scoreboards. There are a few different places, but I like to have it on my member dashboard. And this will tell you, and you can get all of these 4 we're going to look at, the Dow, and you can look at what our signals are doing. I can go into how we determine them, but I'm going to direct you to Chart School at this point so you can read about the trend model and understand the short, mid, and long-term signals, all of which are on the daily chart. They're just different EMA crossovers. The PMO, however, is daily PMO, weekly and monthly PMO, so that you can get a feel for what's going on. And as you can see, the Dow has been showing a lot of strength. And I want to show you back here how you can really even measure some of the information we're getting and why I see it as being so strong. So in comparison, as we've been going along. But right now, we've got a PMO that is now starting to top. But I don't think, this is why it's been so much stronger. I'm going to make a comparison here. Let's look at the NASDAQ's PMO. And you can see we already got a sell signal. We have moved ourselves back up on a buy, not surprisingly, after this breakout we saw on the NASDAQ 100 and technology in general. The weekly chart on the NASDAQ, I was rather worried about a couple weeks ago because we had this bearish rising wedge. But see what has happened? We've broken out above it. So to me, that is a bullish conclusion to a bearish pattern. And that makes it, to me, especially bullish. And then look at this. We have a pending PMO buy signal. Why is it pending? Because we did not get this positive crossover last Friday. And I don't look at weekly signals until the last trading day of the week. That's when they go final. So right now we're setting up to finally lose that weekly PMO sell signal that we've been looking at for so long on the NASDAQ 100. Looking at the OEX, S&P 100, staying in the rising trend channel. We did have that peak below, but it didn't seem to hurt it too much. We are still on a PMO sell signal. And notice, unlike the NASDAQ, which whipsawed right into that buy signal, we're seeing the PMO kind of flattening out here. Not as much, not as interested in that buy signal, but OBV volume, look at this nice volume pattern, that breakout on the OBV, right as we got the breakout up here last week on Friday. And I wanted to show you the weekly chart very quickly for the S&P 100. And I didn't have rising wedge on the S&P 100. I just had the rising trend channel, and it has broken out above that rising trend channel. So I think this is interesting. The issue that could be happening here, though, is if you look at this last bit of rally, it's rather steep. It's steeper than this rising trend channel it has been in, which means it's going to be harder to sustain. And we can see a little bit of deceleration right now on the PMO for the week, but we're not final yet, and it'll be interesting to see how much momentum ends up being lost. Looking at the S&P 500, we look at the daily chart all the time, so I figured I'd take a peek at the weekly chart. And we can see we're in a much longer rising trend channel. I know we've had a few points where we went out of it. This is a good instruction on the fact that you can create your signal lines, this is Monday. I'm having a lot of trouble. You can create your trend lines. They don't have to be exact as far as touching each bottom. You can even have interior rising trend lines. So in this case, I decided to do it as a rising trend channel, and we can see the PMO buy signal is still there for the S&P. We didn't break out above it, though, like we were looking at on the OEX here. And you can see that little bit of breakout above the rising trend channel. But it's the S&P 500 has been holding on to that rising trend channel a lot longer. All right, so I promised you some look at some small caps and mid caps. So I'm going to do IJH, which is the S&P 400 iShares ETF. And as I said, we had this really great run by small caps, and then they've really flattened out and not been traveling with the market, at least at the degree we're seeing, for example, on technology. You can see the PMO has gotten a sell signal, mostly consolidation sideways. I don't like the fact we're really, we're having trouble already as far as getting past, Friday's close. We're on a decline right now. I'd like to see, obviously, a move above Friday's close, and I think we're going to be okay. But this is just for small caps. We don't want to see these PMOs that are topping below the signal line. I think volume patterns still looking okay, which is why I'm not really looking for a big breakdown or anything like that. But you can see the weakness certainly appearing there on mid caps. Here's the S&P 600, and as I said, really bad day. But I want to point out that it could be worse. And when you look at IJR, here's why it could be worse. Obviously, we're holding on to this area of support. I was looking at this as a intermediate term rising bull flag. You got a really long flagpole. And we did get the breakout, but we didn't get it above the previous high here in October. And so it never really executed. I think you could, if you wanted to continue it, to look at it as a flag, but I think it's getting long in the tooth, as they say. So I would not be paying that much attention to it. In fact, the next time I annotate this chart, I'm going to take out that declining trend channel. I think what's more important to note at this point is this trading range that we've been in, and the fact that we're on that sell signal, and it's accelerating when you look in the thumbnail. So that's a bit of a concern, but we are seeing IJR holding on to support at this point in time. All right, 10-12. Let's start looking at some of our decision point indicators, and I will go through them briefly but slowly. All right, concisely. I like that. Okay, so the climactic indicators, these are ultra short term, really, day trader type of indicators. So I find them interesting to give you an idea of what might be happening the next day or two and the next couple hours. I think these indicators can be very good for that. So it's simply, breadth, net advances declines, and net advance decline volume. And here's a good reason why I think that these are pretty good for those types of indicators. So the last time we got a climactic reading was back on Wednesday. See, they are the 27th, but we can't calculate them, of course, until the end of the trading day. So we saw that spike on the net advance declines. We had a lot more declining volume and declining issues. And so when I see those climactic reactions, the question then becomes, is this an exhaustion, or is this an initiation phase? And I look at the pattern that we're seeing in the thumbnail. These are, of course, much easier to read in the thumbnail. We got those climactic readings when we had this decline over here, as you can see. So we've got the third one down. So it was on this candlestick in that really bad intraday low. So when I looked at those readings, my first thought would be that this is an exhaustion, because we've already been on some selling. We've been seeing that decline. We closed this little, it's not quite a gap, but we kind of closed what was almost a gap. So I was looking at this as an exhaustion, a selling exhaustion. And, we got that. I wasn't really thrilled with this candle that came out that the next day, but that's what we're looking for. What's going to happen in the next day or two? This was a sign of an exhaustion. And so the next day or two, the expectation was supposed to be a rally, and we did end up getting that. So that's how it's supposed to work. And I think they're especially good when you have confirmation like this, where you have a VIX that has got readings that are getting, this is inverse. So they're getting higher. People are getting more nervous. So you see this sort of a move where everybody is selling and concerned, and that tells you it's sentiment, right? It's sentiment. Everybody's really bearish, so you should expect a pop in the next direction. But there are the occasions, of course, where you're looking at these upside readings that get spiky. And how do you determine what to do with those? Well, in this case, again, I was looking at this as an exhaustion. We've already been on this rally. We did get that move down, but we'd already been on this rally. So when I saw these readings, I was thinking exhaustion of a rally. So that's how these work. So I wanted to give you a quick peek on what's going on at this point. I'm not seeing, of course, climactic readings at this moment in time. So I would be expecting more sideways movement in the very, very short term, as you can see with that inside candlestick there. Short-term indicators not looking good. I was really expecting them to turn up above the 0 line. We can already see that the STOV has not cooperated with that, and it is headed lower. So this right here is telling me that short term, there's not a lot of support here. We've got these indicators still moving downward. We're not seeing any hesitation, since last week. They're continuing lower. What you look for, what's good, we want these to unwind. They're oscillators. We want to see them get to the oversold territory. So the faster they decline, the faster they're going to get to that oversold territory and then become prime for looking for a short-term rally or a breakout move up. At this point, I don't think that these indicators support that. Another reason why I was feeling neutral about this week, mostly unchanged. Intermediate term indicators on the S&P 500. All right, these are looking pretty ugly right now as well. We got the negative crossover, which is when I start to get nervous on these. I don't get completely nervous when they top because they don't always end with a negative crossover. We got the negative crossover and we've continued lower. Not a good sign for the intermediate term. But the thing is since November of last year, and if you look at these tops on these indicators, and where they came in, you're supposed to expect a decline or at most some consolidation, at least some consolidation. And since November, when we've gotten these tops in these indicators, we've gotten some pullback, but we really haven't seen big time corrections. But you can see how they line up pretty well with intermediate term tops. And so we've topped and we're starting lower. So I wouldn't be expecting prices to start, killing the all-time highs right now. I would expect, again, no change, some consolidation, worst case, pullback. I know Tom and I have been talking about that 2,500 level on the S&P if we start looking at a more serious pullback or correction, but I don't think we're looking at, 2,400. I don't see it looking that ugly. I suppose you could say. All right, so that was the intermediate term indicators. I've looked at the major indexes. I looked at small caps for you. Now I'm going to go through the big four, and then I know Tom and I can we'll wrap things up if there were questions. I know Tom's stalking the chat room, so there might be a question or two. So I'm going to make sure I leave some time for that. So first of all, I'm going to look at the dollar. Dollar has been looking great. I had so many positive divergences on this chart. And if you go to one of my last blogs, you'll see them, but lots of great positive divergences between OBV and the PMO. We have this reverse head and shoulders, pretty much textbook. You want a reverse head and shoulders pattern to come in after a long-term decline or intermediate. You want it to come in off a decline, so it comes down into the pattern. They tend to execute a little bit better that way. I mean, there's certainly, depending on who you talk to, how those work, but typically you want to see them come down into the pattern. I think that was especially good that it did that. Look at the PMO on the breakout. We did get the pullback, but it didn't give us that sell signal on the formation of that right shoulder. We've now executed it. Yeah, it looks like we might have a bit of a pullback, but I think the upside target about 25.25 is completely reasonable. That's pretty much where I'm looking for it to get up to. On the way up, we might have a little bit of hesitation. You can see this hesitation at that 200-day EMA. I think it's going to punch through it. I don't think it's going to have any problem with that. And when I look at the weekly chart for UUP, I mean, that looks great too, because again, overhead resistance, we're looking, that this is the minimum upside target, right, on that daily chart. So we have two tops that are, kind of midterm tops. They're not like big time tops and bottoms at that 25.25, but the big overhead resistance is all the way up here to that 26.75 for UUP, 26.50. At this point, I would be expecting a long move. And look at this PMO buy signal in oversold territory, heading nicely up to support this current rally. So it is really hard to badmouth the dollar at this point. So I'm not. Now I'll go to gold, and gold we can kind of badmouth right now. And a lot of the problem is we look at such a bullish chart for the dollar, and we know gold is of course dependent on the dollar for pricing. So if the dollar does very well, it typically hurts gold or depresses gold. I think the interesting thing right now when I look at this chart is the fact that this area of support has held up pretty nicely off of this top back in February. But I think we're not going to hold it much longer. And the reason being, there's a couple reasons, but one, of course, being the dollar. The other, you can see that PMO top below the signal line. We are getting into near-term oversold territory as far as the PMO is concerned, but we do know it can go lower, which is a problem. Looking at the discount, premium and discounts for Sprott and Central Fund of Canada, the one thing that Carl and I have talked about is, just because it's bearish, or just because you're getting bearish readings does not mean it's bearish, and vice versa. And that's, at this point, I would call this neutral when we look at these premiums and discounts. We want to see some serious discounting here, because that means we're trying to attract the buyers. So at this point, they need to attract buyers. But the thing is when you look at these premium and discounts, we've seen them get far more bearish. And that's what we want to see. And I'm going to just alert you to these three very bearish readings and where they line up here. And you can see they come in. I'm going to squish this chart a little bit here for us so that we can see it a little bit more clearly. And then I'm going to hand it over quickly here soon to Tom. Let's see. Yeah, I want to customize it because I think this is a really interesting chart. So I want to make sure you get to see it. All right. Now you know how to customize the height and width of your charts. All right. And then we're going to annotate so we have these discount rates, but we're just not getting enough. And here's why. So here are some of those I wanted to point out. When we get really bearish here, you want it to get really bearish because what's going to happen? It's contrarian, correct? It's bullish for the markets, or the index or whatever you're looking at. So you want to see these bearish readings, which are, more discounts. And we're just not getting that at this point. And I would want to see more. I'm going to move. Let's see. We're going to put this one on there too. So, and in fact, when we've seen some of these discount rates, we're still seeing the price of gold to go down. So to me, we're looking at some weakness here. We still need it to get more bearish, which means we need it to drop even more. I think you could make a case for a head and shoulders pattern here a little bit. And when it drops below this area of support, that would execute it. And I think a move down to that 1200 area is highly likely right now. So that's what I would tell you about gold. And very quickly with oil, I know I was asked about this Friday and I didn't cover it. We're on that PMO buy signal, got the breakout. I think that looks great as far as USO. Upside potential here at about 1130. it looks like a pretty good play right now. I'd be a little bit concerned that we've already had, a lot of rally. But look at this. Seeing the price of the oil move up above that area of overhead resistance that I've been paying attention to. I know it's still closed beneath the $54 mark, but I think this is great. Look at the scooter. Oil looks really good right now. The only thing I could say that could be a problem is we've got a PMO that's starting to get overbought. But again, you can see it can stretch out further than that. So I think oil is still looking pretty good. And TLT bonds at this point, I've been very bearish, and I have to say I'm still fairly bearish. I think it's good. We had this head and shoulders pattern that I was looking at. It was sloping upward neckline, and when we're looking at a bearish pattern, not necessarily what I want to see is that upward sloping neckline. And we did get the move below it. So I was thinking we're going to execute and move lower. Instead, we're popping up higher today, back above that 200-day EMA. PMO is now twitching back up. I still don't like bonds. I still don't think they look that great. But this area of support is trying to hold. And, at this point, it looks like we're getting a rebound. And again, we passed up above that 200-day EMA. So we could still see a little bit of a rally here in bonds. And that... it's the decision point report for Monday. I hope you all found that interesting. And I don't know if we had questions, Tom, or if we're just going to wrap it up at this point. I leave it up to you to talk.
Yeah, we have a couple of questions I want to take real quick because we only have a couple minutes here. First one I wanted to bring up, there was a question actually I had gotten in my email asking about Starbucks and the price of coffee and was there a correlation. So I thought I'd bring that up. Starbucks reports their earnings, I think, on Thursday evening this week. So pretty timely to go over. This is a longer term weekly chart going back the last 10 years. And so what I have here is the price of Starbucks on the top, and down below is the correlation between Starbucks and coffee prices. So in other words, when you see readings above zero, it means that the two head in the same direction. Starbucks price goes up, same time coffee goes up, which really doesn't make a whole lot of sense because coffee is obviously one of the big expense line items at Starbucks. And you would think that when coffee prices go down, it would actually lead to higher earnings for Starbucks, which would then send the Starbucks price higher. The only thing I would say is that really there was about 2 years of concentration where Starbucks and coffee prices went together. And I think back then we were starting to see so much demand, from the bottom of the recession that we had been in, that I think the two were able to go up together for a period of time. But really, Starbucks has continued to go up as coffee prices overall tend to go down. So that's where this inverse correlation comes in. And this is what I would tend to expect. I think you're going to see periods where they go together. But for the most part, when coffee prices are going down, I would think Starbucks would go up. So if we pull up the price of coffee, and we'll just do a daily chart real quick, you can see that, say, in the second quarter, see how April to June, we were in this downtrend of coffee prices. And if you take a look at Starbucks stock price during that April to June period, notice the stock price was going up. And then we started moving down in Starbucks in the third quarter, just as coffee prices were moving up. Now what's interesting is we've been seeing coffee prices come down, getting close to the lows of 2017. And yet when we look at Starbucks hasn't really bounced. So this is going to be an interesting earnings report. I wouldn't be surprised to see Starbucks surprise to the upside. We're starting to see a lot more technical strength in restaurants and bars. We've been talking about that for the past few weeks. So I think Starbucks could come up with a surprise to the upside. We'll have to wait and see. We'll find out more on Thursday night. So that was one question I wanted to address. And we got about a minute left. One other question that had come in, do you buy breakouts intraday or wait until the next day? The problem with buying them intraday is that, for instance, on AMD, here was a breakout intraday on AMD back in July. We were actually clearing the prior high, and then we reversed, and we couldn't confirm it on the close, and then we went lower. I think you got to be careful. I like to buy breakouts toward the end of the day so that I know that breakout has confirmed. Sometimes if you wait until the next morning, you get another gap up, and then it makes it harder to pull the trigger. So with that, Erin, do you have any final thoughts as we wrap up today?
Well, Just glad that Monday show is over since I was having a little difficulty here getting things going. But no, I'm looking for not much to happen this week in the market. So nothing too exciting there.
Okay, well, the 10-year Treasury yield, I think I'm going to probably be keeping an eye on as we get into the latter part of the week or throughout the week, especially with a Fed meeting. I think that's important because obviously that tells us whether or not money's rotating away from Treasuries and into equities or vice versa. So we want to kind of keep an eye on that. But that's really the biggest thing. I mean, obviously we got some big tech earnings coming up this week with Facebook and Apple, and of course just talked about Starbucks. They report later this week, so we still have some big earnings reports to go, but lot on the docket, and we will be here to provide it for you as we move along. If you had other questions, we'll try to get to those on Wednesday. I want to thank everybody for joining us today. Again, please complete that survey as you exit the show, lower right-hand part of your screen. How do we do? Just click on that link as you exit, and you can give us some feedback. We love getting the feedback. I know I read it every day, and I know Erin does as well. So we'd love to get your comments there because they do tend to help us shape future shows. As a reminder, Market Watchers Live airs on Mondays, Wednesdays, and Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everyone. See you on Wednesday. Happy trading.